In this video I'm going to discuss the 1, 2, 3 reversal pattern. It's very similar to a double top or double bottom. However, the market is not weak enough to hit the previous low, or for a reversal off the high, not strong enough to go back up to the previous swing high. Let's say the market's trending up, and then it reverses, and it comes up. This is an example of a 1, 2, 3 reversal pattern. Okay, the market was going up. This is the previous swing high. Pulls back. Usually it's a decent sized pullback, which is one sign of the upwards momentum dying out. Super strong trends typically don't pull back as much. They might come down a little bit and try to go higher. And then it comes back up, and it's not back up to the high. And in fact, most times if you drew a fib level from swing 1 and 2, the market doesn't even go over the 50% level, and most of the time never goes over the 62% Fibonacci retracement. That's one way of spotting mathematically the 1, 2, 3 pattern in action. Let's show this reversal pattern off the lows. The market's working its way down, retraces back up, and then comes down. A lot of times the market doesn't even pull back more than the 38% retracement from point 1 and 2. So if you drew your fibs on there, 38% retracement, 50%, 62% approximately. The market oftentimes on these 1, 2, 3 patterns doesn't even go below the 38% retracement. If it just comes down a little bit, doesn't even retrace 38% down and then shoots up, you want to go long. And one safer place of going long is once price breaks out above the swing point 2 high level, you go long. For shorts, obviously the market goes up, pulls back to the number 2 pattern, comes up again. When price comes back down underneath the 2, you would look for sells. Let's look at some real world examples on the charts. Here you have a nice one in the euro dollar. The market comes down, goes back up, and then comes back down. It doesn't double bottom. It's a 1, 2, 3. 1, 2, 3. And on a tick chart you can find even a more precise entry. I oftentimes go long as soon as it goes back above the 3 patterns bars high right here. Would be long at 3, 4, 7, 8 with the stop right underneath the low. And it also helps to have our FX Trend Intensity Pro and IntelliTrend on the chart. With these on the chart, you can see the market made a move down, but statistically the market really wasn't that weak. Anything underneath the dotted white line, the 20 level, is not that intense. And so when you see a 1, 2, 3 low after the previous trend down was not that substantial, it's more likely to reverse and go up. Also note that oftentimes, as this is going sideways right here, before it breaks up, the IntelliTrend bars go from red to either lighter red or in this case green, which adds to your probability. Let's look at another example. Here's a decent example. The market was coming down, and previously at this point it wasn't that weak, and so if the market came down halfway of this upswing and stalled and started to go up, you could look to get in. But it made a lower low, and statistically that move down was extremely weak. So anytime you see plus 20 readings, usually that trend continues. So you're looking to sell this on the way up, but guess what? On the way up, it had incredible strength. Here you have the 1, 2, 3, and on this little pullback right here, there's almost no weakness at all. 1/2 to 1/3 the amount of weakness it had before, and also the move up had incredible strength. So you might look at this little wedge pattern right here and go long once the market breaks out. And as this starts to go up, you see this go green. The IntelliTrend bars go dark green, which shows the pound is one of the strongest of all the currencies, and the dollar is one of the weakest, which means the pound dollar is likely to go up. Excellent example here, improved by our statistical trend tools. Here you see a nice 1, 2, 3 low. The market comes down, and it was moderately weak, but it wasn't at the extreme level. And it goes up right here. Unfortunately, not that much strength. Less strength than on the way down, so at that point you're expecting it to reverse down, but guess what? It only goes down a little bit, and it does so with even less weakness on that down move than it had previously. Remember, we're comparing the dollar to every other currency, the Swiss to every other currency, and what this is telling us is that the dollar is no longer weak right here and the Swiss isn't that strong. So you might see this little sideways range here, and I probably personally would have went long right here at 9900 to 9901, and you can put your stop underneath here or underneath the sideways range if you want even a tighter stop, and you can see the price shot up about 15-20 pips. It wasn't an explosive move, but it oftentimes finds reversals. It's called the 1 2 3 reversal pattern. Here's another example of it. Very strong trend up, very big move down. The bigger the move down, the better when looking for a reversal. And you can see as it starts to go back up, the extreme strength it had before is not there, and on this up move it had 1/4 or 1/5 the weakness of the last down move, and it's also kind of has a wedge pattern kind of forming right here, and when it breaks out you go short and the price comes down 20-25 pips. Here's another example at the high here. The market was going up, had incredible strength, pulled back without that much weakness. Anytime you have extreme strength, it's likely to continue up, so trend traders might have bought this little breakout right here over the highs. Remember, we draw trend lines off the bar's high, and on the way up it ran out of steam. There was no strength here, so a smart trader would recognize that the Australian is no longer strong, the dollar is no longer weak, look to get out of their trade, and spotting this 1 2 3 pattern right here, exit their long trade with a very, very small profit, flip and go short, and whether you made 10 or 15 pips or held on a little bit longer, the price reversed. Here you have a 1 2 3 pattern off the low. The market's coming down. It's also going down with very little weakness, and so anytime you see a 1 2 3 pattern off the lows where the market went down with very little weakness, that means the Australian was only slightly weaker than the dollar. And so when the price went up, and you can see the bars went from red to green, that improves your odds, and when it breaks out right here, you get in and the market shot up about 40 pips. You also will see these in the direction of the trend. Here the market shoots up, pulls back. Obviously the last move was making a higher high, made the highest high of the day, pulled back, rallied up a little bit, pulled back, and didn't break this low. The FX Trend Intensity Pro's green, our bar color's green. You might have got into that trade right here, and you can see the trend continue.